It's your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning we're looking at an ETF bubble. Well, many of us know about it. I actually reported on this, let's say about a month and a half ago. I did a double spin. It was an interesting interview that I saw out of Real Vision Finance on YouTube, and I'll leave a link to it. The Grant Williams and Steve Bregman sat down and talked, and this was actually an old interview, but what he's saying is really ringing true today, almost 2 years and some change later. So we're going to take a look at this ETF bubble that Michael Burry, that is the author of The Big Short. I really suggest you guys, if you haven't, and I think it's still applicable, read that book. The movie was good, but the book was even better. It was more detailed. I read it many years ago, and I suggest you read it too. It just gives you kind of a insight into Wall Street and their hubris. To be honest with you, there's so many so-called smart individuals on Wall Street, and they suffer from groupthink. They really do. And this book really highlights that. And I'll leave a link for that in the description below. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And before we get started, I may be preaching to the choir, because according to Definitive Lipper, individual investors are slated to withdraw more than $135 billion from equity mutual funds and exchange traded funds this year, the most since they started keeping record in 1992. And ironically enough, to the contrary, there are record inflows heading into bond mutual funds and ETFs. What the hell is going on here, people? I think I can tell you exactly what's going on. People are beginning to understand that the stock market is a complete bubble, and the only place they can go is into bonds, where they can at least get some yield while holding their funds in that type of asset class. But even that, I think, is going to catch them by surprise. But hey, I guess you got to pick the best house on the worst block, right? It goes on to say what we're witnessing here is a transformational shift that has been unfolding for years, one that's also changing the very job description of the equity portfolio manager. With a good portion of America's investors now aging and focused more on capital preservation than appreciation, investment flows are no longer motivated by performance, and the money trail shows it. Driving all of this is the single most important influence in investing today, the modern wealth manager. And get this stat, people. According to TD Ameritrade Institutional, 88% of wealth managers use ETFs, the most popular investment vehicle in their arsenal. It's estimated that 2/3 or more of all ETFs are held in accounts directed by wealth managers. It is not an understatement to say that ETF is the tool that created the wealth management industry. Prior to its creation, a wealth manager, i.e. stockbroker, needed a large bank to back them. The ETF freed the wealth manager from the infrastructure, allowing them efficiency. So that kind of gives us the landscape as to how and why ETFs became so popular. But like all things, everything has a cycle and must come to an end. And we sometimes get in a situation where we oversubscribe to certain ideas and strategies, and that's what's happening here with the ETFs. And you'll see this in the video from Real Vision. It's causing a misallocation of funds and a misrepresentation of the value of those particular stocks that make up an ETF. The market is no longer looking at the individual stocks that make up the ETF, but looking at it at an aggregate, which is wrong, because now you're kind of placing a price across the board on all of these particular stocks that may make up this ETF instead of valuing them individually. And this is why we're seeing hedge funds really have a hard time. They can't beat the markets anymore. Passive investing is taking over versus active investing, and it's really causing a mispricing in the entire equities market. And Michael Burry and many others, he's not the only one, are sounding the alarm regarding this issue, this impeding crisis that we're going to see with ETFs. And if you're not paying attention, people, it may catch you off guard as well. So you definitely want to be more diligent about knowing what stocks you own in these ETFs, and if they're being valued correctly. Michael Burry, the investor that famously shorted mortgage securities back in 2008. So again, Michael Burry, if you guys don't know, is the famous guy who shorted the mortgage securities market right before the 2008 housing crisis. But he had an interview with Bloomberg, and he said, and he normally doesn't do interviews too often, but he said that the bubble is ignoring small cap stocks. The problem is happening because the pillars of passive investing, exchange traded funds, and index-based assets mostly focus on bigger companies. This puts downward pressure on the stocks of smaller companies and have effectively orphaned smaller value type securities globally. Burry isn't the only one calling out passive investing. Over the last few years, as passive investing has grown in size and popularity, many investors have called out flaws in the approach, which minimizes buying and selling to protect investors from dips in performance that can come with frequent trading. In today's current market environment, where a number of recession indicators are flashing and investors are becoming increasingly nervous, money managers have also argued that passive strategies can set up investors for major losses in unexpected market downturns. And so here are some of the big names that have spoken out about this issue regarding passive investing and this ETF bubble that has been created. Carl Icahn being one of them. Billionaire investor Carl Icahn told CNBC all the way back in 2018 that a sell-off in stocks showed issues in passive investing. He said passive investing is a bubble right now, and that's a great danger. You need regulation on this stuff. He highlighted triple leverage ETFs that offer triple returns of an underlying index, saying that they shouldn't even be available for purchase. Jeff Gundlach, and I've covered him many times in the past, guys, he's another smart investor. He said, I wouldn't advise anyone to be a passive investor. He said he thinks, in fact, that passive investing and robo-advisors are going to exacerbate the problem in markets because it's hurting behavior. Howard Marks is another individual who has voiced his opinion about the ETF bubble. He said, might the inclusion and overweighting in ETFs of the market darlings, a source of demand that may have driven up their prices, be a source of stronger than average selling pressure on the darlings during the retreat? He also added that we won't know until it happens, but it's not hard to imagine the popularity that fueled the growth of ETFs in good times working to their disadvantage in bad times. Robert Shiller, who is the co-author of the Case-Shiller Index, if you guys aren't familiar with that, very popular index, but he also talks about and warns of the ETF issue. And lastly, Jack Bogle, the late founder and chief executive of the Vanguard Group, also mentioned this in 2018. He did speak out about this issue, which he was the actual creator of this stuff. He said in an article in the Wall Street Journal that it's only a matter of time before index funds own half of the U.S. stocks. He said, I don't believe such a concentration would serve the natural interest. So even he knew, the inventor of this, if you want to call it derivative, he knew that this would become the issue, that people will pile into these index funds. And, you know, there's actually a second interview that I want you guys to check out from Real Vision as well with Krishnan. And he talks about really the technical side of why ETFs are a ticking time bomb. He essentially says that the liquidity in those funds are mispriced. And so the market doesn't see that. Many of those passive investor funds don't understand that. And it's essentially the same thing that Jeff Gundlach said regarding ETFs, is that this herding behavior is going to cause a liquidity crisis on the way out. So going in is fine and dandy. You can pile into these ETFs with no problem. They'll take your money any day. But when it comes to exiting and trying to liquidate these ETFs, it's going to be a huge problem. It's going to be a vacuum in liquidity that's going to cause this thing to unravel fairly quickly, as Hari noted in his interview. And I'll leave this one as well. I think you should watch both of these interviews from Real Vision. The Hari Krishnan one is a lot newer. It was actually recorded in 2019, unlike the Breckman one in 17, but both are great. Both are applicable to where we are today, and both should help you guys make decisions on how you should reallocate your portfolio. Look into how many ETFs you have, because when stuff hits the fan, individual stocks have more liquidity than an ETF fund, essentially is what I'm saying. So look into that when you have a chance, even though according to some reports, one coming out of Bank of America, don't know how much you want to trust that, they're saying that ETFs are seeing a growth rate of 25%. We'll have a total market cap of $5.3 trillion in assets by the end of 2020. And get this, by 2030, you're saying it's going to have a $50 trillion market cap, almost a 10x, literally almost a 10x just in 10 years. So that's if we even survive that long. I'm not too sure we will, but you see the trend, and this is not good. As Jack Bogle said, if this continues, it will have half of the stock market piled into ETF. This is crazy. And, you know, really from what it looks like, though, it's not the individual investors that's being duped here. It's more the money managers. They're the ones being duped into this ETF cycle. and it's going to end badly. So it looks like the individual investors are the smart ones in this case. But hey, that's my 2 cents on the subject. Let me know yours in the comments below. I would love to know how much of your portfolio is in ETFs, and did you know about this ETF bubble? Again, please watch those 2 videos that I have pinned in the comment section below. I think it will greatly help you understand the severity of the situation, and maybe you can adjust some things to protect yourself when we do have the next recession, because it's got to come. We can't not have another recession, people. It's just, I know the Fed thinks that that's possible, but I think we all know what goes up must come down at some point. Again, if you found this video informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. It's your boy Crypto Blood. I'm out of here. Holla.